Hello everyone. Welcome once again to Kotak Securities weekly fundamental podcast. This is Rini Mehta. Stock markets ended flattish last week. Markets basically focused on corporate developments and the onset of fourth quarter earnings. While worries around rising interest rates dampened the mood slightly, the announcement of a merger between HDFC and HDFC Bank was a notable event. Small cap, capital goods and mid caps were major gainers on a week on week basis. Now if we look at benchmarks, Sensex was at 59,265 on Friday, while Nifty was at 17,727. On the other hand, mid cap and small cap index outperformed during the week, gaining 3.5% and 3.7% respectively. Most of the sectoral indices ended in green during the week. BSC Power was the top gainer and IT index was the top loser. Now coming to the economy side, GST collections for February stood at 1.4 lakh crore rupees, which were 1.33 lakh crore rupees for January and 1.38 lakh crore rupees for December. Meanwhile, RBI kept repo rate and reverse repo rate unchanged, with all 6 members of RBI MPC voted for retaining stance at accommodative, while focusing on withdrawal of accommodation to ensure inflation remains within the target going forward, while also supporting growth. Globally, investors in US appraised the likelihood of tighter monetary policy from the Federal Reserve to combat inflation. On Wednesday, the Federal Reserve disclosed its March meeting minutes, revealing that policymakers plan to reduce their bond holdings by a consensus amount of about $95 billion a month. The minutes also indicated potential interest rate hikes of 50 basis points in future meetings. Investors in US are also looking ahead to earnings season, which will kick off this week with reports from 5 big banks. In other international news, the United Nations suspended Russia from the Human Rights Council in a vote Thursday. 93 member states voted for the resolution, 24 voted against, including Russia and China. India was among the 58 member states that abstained. The US Congress voted to revoke Russia's trade status and ban oil and gas imports, along with banning all new investments in the country and sanctioning President Vladimir Putin's daughters. The European Union has also approved new sanctions against Russia. COVID is in focus in China, with Shanghai reporting 20,398 new asymptomatic coronavirus cases and 824 new symptomatic cases on April 7th. Amidst all this, let's see foreign investor interest in Indian markets. FII flows continue to remain negative in the month of April till date. They were net sellers to the tune of rupees 3,853 crores till date. One of the key reasons for FII's outflows is the prospect of aggressive global rate hikes, with the US Fed signaling that it is prepared to act more quickly than previously guided to contain rampant inflation in the country. Given the headwinds in terms of elevated crude prices, inflation, etc., FII flows are expected to remain volatile in the near term. Moving on to the top stock picks, of course, HDFC and HDFC Bank, after they were in news last week. So, HDFC Bank and HDFC announced that they have secured board approval for an amalgamation into the bank. So, shareholders of HDFC will receive 42 shares of HDFC Bank in lieu of 25 shares of HDFC, while subsidiaries or associates of HDFC will become subsidiaries and associates of the bank. Although we do not see very large synergy between synergy benefits from this transaction, we believe it will benefit the bank in building a long duration mortgage book, another lever for secured growth. So we have a target of rupees 2,990 on HDFC and 1,780 on HDFC Bank. Our another pick Again from BFSI space would be Home First Finance with target of rupees 960. Home First's third quarter performance reflects a firm exit from the COVID related slowdown with 8% quarter on quarter loan growth for the second consecutive quarter. Meanwhile, early collection indicators, though improving, remain lower than pre-COVID levels. A tail of sticky non-performing loans is, however, driving near-term credit costs. We revise estimates and retain our buy rating with fair value which is revised to 960 rupees from 900 earlier. So guys, that's all for today. Happy investing. Signing off. Thank you.